AI isn't just tech, it's disrupting every single one of them. At the same time,
everyone's telling you, oh, bet on the AI winners, buy NVIDIA, buy the Magnificent Seven, overweight tech. But I think what nobody's saying is, hey, what if that's wrong?
Yeah, and I think kind of where this leads us to is, why are we talking about this? Good afternoon. Patrick Dwyer and Greg Pool here at Aligned Wealth in Miami. And we are here today to discuss AI. It's a wildfire.
What does that mean?
Well, I mean, if you watch how a wildfire moves, it doesn't go in a straight line. It just it's totally erratic, and it jumps all over the place and skips one house and burns the next one down, changes direction. It's erratic. And no matter if you're the best firefighter in the world, fighting a wildfire is extraordinarily difficult. And they burn out when they burn out. It's nature out of control. And that's kind of what AI is. It's kind of a wildfire. We saw it last week. Yeah. With all this stuff going on with SaaS, and just think that was one announcement from Claude disrupted the entire market. Imagine how many more of those types of announcements we're going to have.
Yeah. And in fact, it's a popular perception is the opposite. Everyone's telling you, oh, bet on the AI winners, buy NVIDIA, buy the Magnificent Seven, overweight tech. That's been the right call. But I think what nobody's saying is, hey, what if that's wrong?
Yeah. And it's because we're early. I mean, we're just we're in the dial-up phase here of this thing. I mean, this is really new, because AI isn't disrupting one business. It's not just, AI isn't just tech. It's disrupting every single one of them. At the same time, work that can cost like $300 an hour now costs 3 cents. Yeah. Legal, medical, financial, creative, 10,000 times cost reductions across the board. When change is that big and that fast, nobody knows who's going to win. Yeah. Nobody does. And so there's got to be a certain amount of humility that enters your thought process and investment process when you go through something like this, unless you're delusional.
Look, I think that what we saw in the dot-com bubble, I think, is a really good roadmap, because what looked obvious then actually really didn't play out the way most people thought, right? I mean, people thought Cisco was going to dominate, Sun Microsystems owned the server market, WorldCom, Global Crossing. I mean, these are companies that didn't even survive. They were the infrastructure players, and so I think what became clear was there were in fact a huge amount of winners, and the internet revolution was a massive investment opportunity and turning point. But actually, who ended up winning was very different than what consensus thought.
Yeah, it was remember when that happened, Amazon barely existed in 2000 and Google didn't exist. Frankly, Facebook wasn't even imagined. The companies that created trillions in value weren't on anybody's radar. I would venture to say we're going to be really surprised how things turn out this time. And investors could be really wrong about a lot of this stuff.
Yeah. And look, I think we always say, look at how people get paid. The truth is a lot of people get paid to tell you they know who's going to win the AI revolution, right? I mean, it's to their advantage to convince you that they have.
Wait, are you telling me you don't know? Because I thought you knew.
Yeah, I know. I tell you that, but I tell all of our clients and followers that I don't know. And guess what? Either does anyone else. And, I think the truth is, there's probably going to be a huge amount of winners all over, whether it's clouds, whether it's AI native startups, it'll be chip makers. But, who it is among them or which of those, I don't have confidence that anybody, including me or even you, can predict.
Yeah, and I think kind of where this leads us to is, why are we talking about this? So when you look at the strategies that we put together for clients, humility is part of our strategy. We are, and by the way, if you talk to the 40-year-old version of me, I would have been like, oh, my firm knows, and we have an analyst who thinks this, and that's got to be right, because you hang your head on that stuff until you get your head ripped off a few times in the market, and then you learn. But I think that humility is our strategy. We want to own a broader set of things than we've owned historically in our direct index, in our portfolios, because we know we're going to be really, really wrong on some of these things. Yeah. And the losers can't take us out of the game. We're so bullish that the future is going to look great for equity investors, meaning profits are going to increase. We think it's just getting the average is going to be the win.
Yeah.
Because I think, again, only 7% of investors and active managers beat the market.
Yeah. But look, to get the average, you're going to have the big winners. And when we look at index performance, a lot of the index performance is driven by a really small number of companies. If you don't own those companies, you don't keep up. And so, we position our clients here at Aligned across, every major asset class in equities across 5 global equity indexes. Because winners are going to emerge in U.S. large cap, in U.S. small cap, in developed, international, emerging markets. They may be who we think, or they may be people we haven't heard that just get bigger and end up becoming huge winners. And you don't know which. So our view is you own all of them.
Yeah, when I think about like, I have so many people come to me and say, well, why do you own Asia? Like, I don't want to own Asia. I only want to own India. And I'm like, I look at them, I'm like, you want to own Asia because like they're going to have some of the world's most dominant manufacturing companies are going to come out of Asia. That's why you want to own Asia.
Yeah.
And if you don't own those in an index, which lets them go to the top, you're going to miss out on a lot of returns, in my opinion.
That's true. That's true.
So let's talk about private credit, because companies need financing through disruption, right? There's going to be a lot of that, private equity and venture capital, because AI is creating massive private market opportunities. Real estate and infrastructure, because AI needs physical assets and massive amounts of energy. Commodities too, copper, energy, materials, even Bitcoin, because money and payment systems are going to be disrupted. So like, this is a period of time where like, we've had a lot of decades where you wanted to be pretty narrow in what you owned in the US. But I would say right now, you need to have a foothold in a lot of these different places because they're all part of this mosaic that's forming.
Yeah. I mean, I don't think this is indecisiveness. I think it's intellectual honesty. I think Bitcoin is a perfect example. The vast majority of people are either absolute Bitcoin messiahs or they say it's useless, it's a complete fraud. And I say, we say the truth. We don't know. We can see the bull case for it. We've talked about it. We've done the video. It's higher users among younger folks and higher users among people that don't have access to banking. And we also see the risk, which is, maybe there's risk that quantum can break it. We can see the realm, but we can see cases where it's an incredible asset and you really want to own some. And we can see cases where maybe it doesn't work out as people think, but that's why you want to have some, but not a lot of it.
That's right.
And I think that's just being intellectually honest, and you position for really every possible outcome instead of betting everything on one outcome.
Yeah. I mean, what we're really talking about is playing the game we can win, which is the patience game, right? That's it. And the advantage of humility is it keeps you invested, right? When you make concentrated bets, what happens when your AI winner underperforms for 6 months? And you put too much money in that. You panic and you sell and you try to pick the next winner, and then you just go down this cycle of underperforming. A lot of times investors, make one great investment, they think they're a genius, but they don't realize if you make 10 bets, if you make 10 investments, you're going to underperform. I mean, that's just how it works. I mean, the math is incredibly compelling.
Yeah. And like you said, when you are broadly invested, when you own everything, there's really nothing to switch to, right? Some things will underperform, some things outperform. The nice thing about index investing is actually the winners get bigger. And if you look at most active investors, actually they can't own enough of the winners because they're looking at risk metrics or they're looking at indexes and say, well, we can't take a big enough position. Index investing allows you to do that. And you really don't need to make a lot of changes other than systematically rebalancing. And it allows you to stay invested. And staying invested is actually how you capture the enormous wealth creation that has happened and we think will continue to happen.
That's right. So being patient is going to be a big part of this thing. On the horizon, 5, 10 years, 20 years, there's going to be a lot more profitability, and not just for a couple of companies, but across the economy. Like businesses are going to become just more efficient. You just need the patience to last.
That's right.
You just got to get there. So this is how we work at Aligned. We do direct indexing to get your equity exposure across 5 indexes, and we have a couple of tilts. A total cost of our direct index when everything else is 0.65%. You can watch some of our videos on our performance. It's been really good. We don't have any fund expenses on top of that. We tax loss harvest continually, right? Because every time we tax loss harvest, you get a benefit from that. Last year, we were able to add almost 2% to returns through tax lossing through the first quarter when everybody was panicked about Trump. We add all these private credit, real assets, and venture and stuff for other forms of diversification and growth opportunities.
Yeah, so you super diversified. We rebalance things systematically. We try to be thoughtful about asset classes, but we're not market times. We're not taking hero bets. We're focusing on keeping fees low, keeping taxes low, staying invested. We're not saying we win. We're not saying we know who the winners are. We're saying nobody knows. And I think instead of selling confidence, we're selling humility. We're also selling math and probabilities that we know that over time, this approach should work.
I agree. And, so while other people are trying to basically predict how the wildfire is going to burn, we're saying we want to own the whole forest. And, when it regrows, we're going to be there. But the wildfire is coming, right?
Yeah, it's here.
The disruption's real. Potential profits are enormous. But the path is not predictable. So we're going to be humble. We're going to own things. We're going to own a lot of things. And we're going to stay invested and let time do the work. So that's our approach at Aligned. Humble, diversified, patient, focusing on managing the things we can control, which is our fees and taxes. And we ask you to please like and subscribe to Aligned on YouTube and give us a holler if you'd like to have us review your portfolio. We'd love to have a conversation with you. Thank you.
Thank you.